What's up folks, it's your boy NCS again. So in today's video we'll be talking about break of structures, which is BOS. So in today's video we'll be talking about the best break of structures, the type of break of structures that works best in the market, the only break of structure that I've been trading for quite a long time now that respects my setups and that gives me the highest win rate. So without further ado, let's get straight into the video. So what is a break of structure? So a break of structure is when price keeps breaking highs or lows while maintaining the particular trend it is on. What do I mean? A break of structure is when price keeps breaking highs or lows. That's if in a downtrend it keeps breaking highs or lows while still maintaining the trend it is on. Like in this case, market is in an uptrend, high highs, high low. Price keeps breaking highs, still maintaining the uptrend it is on. So let's check in that trend. Price keeps maintaining lows, keeps breaking these lows and keeps maintaining this trend without violating the previous high that it created. So price keeps breaking and keeps going down. This is what we call a break of structure or a BOS. BOS is an abbreviation for break of structure. So we have been taught that this is the general way of marking a break of structure. We all know that this is how we mark break of structures, and mind you, this is not wrong. This is actually how to mark a break of structures. But I will be showing you in this video the type of break of structures that works best while picking your entries. This is the type of break of structures that I trade, and it works well. Trust me, it works perfectly well. By the end of this video, when you backtest this, what I'm about to tell you in this video, you will see that truly it really works. It is the best. So without much hype, and mind you, this is just for educational purposes. I am not a financial advisor. Before placing this, before doing anything I taught in this video, make sure you do your own researches. You backtest it before putting in your real money. That is just it. Don't come and start saying I'm the one that gave you an advice. This is just my own opinion. This is how I trade. So let's get into the video. I know you all be wondering that if this is not how I mark my break of structures, then how else? So for me, I don't trade a single break of structure. I don't really trade that. I don't trade a single break of structure. I trade double breaks of structure or triple break or four breaks of structures. I don't trade anything less than double break of structures. Why? You know, sometimes you might see a single break of structure. Like look at this region now. See this single break of structure, and you feel like this is a protected low. The market should not violate here. If not, market is reversing or it has shifted structure, but market will end up violating this place, and you now come here and start looking for sales while price is still on an uptrend. And what will now happen? Price will come, do like it's respecting your zone, and then take you out. Let's say you enter this market now. You enter this market at this region. You've taken your first loss here. Taking your first loss. Then, as market shifted structure, you mark this other block here. You've marked this other block here, waiting for a sell. You've ended up taking another stop loss right about this region, and you start asking yourself what's wrong. That is why I avoid a single breakout structure and I stick to a double breakout structure, which works best. Let me show you what a double breakout structure really looks like. So let me look for a zone where double breakout structure occurred. Let me look for it. Okay, take a look at this region. Market broke structure here. First break, broke structure here. Second break, and here third break. This is a 3 break of structure, and market always tends to respect this thing. It respects it like mad. Not every time though, but 95%, 90% of the time, market tends to respect this type of breakout structures. So I'll be showing you how to do your top-down analysis down to entry, how to use this to find setups, how to use this thing to enter markets accurately. So before making use of this double breakout structure, you must align with the direction of the trend. Like, you can't be taking double breakout structures in another direction when market is going to another direction. What do I mean? Double breakout structures is only respected when you are in line with the trend. That is, when you are in the right direction which the market is going. Like, if the market is an uptrend, you should be looking for double breakout structures in direction or in general direction of the market, in line to follow, like to do what the market is doing, to follow along, to ride the trend to wherever the market is going. Because if you don't do that, you will end up taking losses and losses. Like, take a look at this region. We had double breakout structure here. First break right about this region, second break right about this region, and this is another block. This is another block. Price then swept, like price broke with an impulse. We've taken our loss with pride. We've taken the loss with pride. So this is why you should always take this double breakout structure in line with your trend. Don't go against the trend. Take it in line with the trend. Maybe in my next video I'll be showing people how to market your trend and how to know your bias on the higher time frame. But for now, let me show people how to mark a double breakout structure properly. So let's look for another place where this double breakout structure happened. Let's go. So here now we're in a downtrend. As you can see, market shifted at this region. Market shifted here, and then we're expecting sales. Market came here, broke this low. First break, came here again, gave another break, a double break. Then market respected this key level or this breaker block right about this region and sold. It sold to the downside. Can you see? Can you see how this thing works like magic if you follow the general direction of the trend? Look at this region now. First break, second break, then API is here. When this trade market swept us out. That's if you're using a tight stop loss. But if you have kept your stop slightly above this high, it have still been in the market. At least that 1:5. 1:5. Let's look for another place where this thing worked, where it happened. It happened where price respected it. It's not a good break to me. That's not a good break. Okay, look at this region now. This is the double break, this is the second break, then the first break is this one inside. Market gave us an inducement, came to our POI and said buy. You buy from that other block, stop loss below this candle here, below this wick, then target a possible zone of liquidity, which is this place, this high here. You target it as your take profit. So it just works, like it works well. Just do your back test, and mind you, your double break of structure have to be backed up by liquidity. That is just what makes it work. That's what makes it work almost every time, because you can't be trading just a double break of structure and you're expecting price to respect your point of interest every time. What do I mean? Take a look at this region. We have our liquidity right about this region. That's why market, every double break of structure that I marked here in this video had liquidity backing it up. This is a single candle liquidity here, single candle inducement. Later in the future, I'll release a video on liquidity, so that is why you're meant to stay subscribed. Turn on your notification bell to know when I draw videos that can help your trading journey. This is also a single candle inducement. A single candle inducement. Where? There's a next zone that I marked. Well, there's no other zone. So your double break of structure must have an inducement backing it up. If not, it might fail. So let me show you how to use this double break of structure now to pick an entry using both your higher time frame down to your lower time frame. I will just show you how I do top down analysis to catch trades from. You will learn how to do your top down analysis now, because you can't just come here and start following what the market is doing, because sometimes market might be trending up here now, then on the higher time frame we're selling, which you might end up taking unnecessary losses. So let me show you how to do your top down analysis perfectly well. When doing my top down analysis, I always make use of the higher time frame, like 12 months, but in this scenario I just want to make use of the 1 month time frame. So coming here to our 1 month time frame, we can see market is uptrending. Let's just use one region here as a case study. Let's make use of this area now. Let's make use of this area that I marked out. Let me show you. Let's say you came to the market when market is still at this region. How will you use your double break of structures now to pick entries? So after coming to your monthly time frame, and you can see right about this region, the market is downtrending. To tap into this other block here, maybe to continue buying or even to come and take at this. Let's just assume you have not seen what happened at this region, maybe to take at this low or to continue buying. So now go down to our daily time frame, into that zone. Now we'll go to that zone that we marked, that retracement. As you can see, it's downtrending on the daily time frame. But downtrending, we shifted structure at this region, and now price is just downtrending, selling down. So now head over to our 4-hour time frame, go over to 4-hour time frame, and then start looking for zones where market might sell from, since we're in a sell market. So at this region now, we can see this double break of structure. You can see this inducement. You can see this inducement here. So we find the zone where market might react to. Look at this key level. This key level here. We'll enter from this key level. So coming to your 4-hour time frame now, we've seen our point of interest area. Me, I don't enter from 4-hour time frame directly. I will just know what the market is doing on the 4-hour. Possible zones where market might reverse from. So coming to this 4-hour now, seeing that market is reacting from this key level, we go over to our 1-hour time frame, which is my entry time frame, either 1 hour or 30 minutes. Depends on the one you use, but me, I make use of the 1 hour mostly. You then come to your 1-hour time frame. As we're now in our 1-hour time frame now, we can see that price came to that zone. Why coming to that zone? Is then making this structure higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then give us what? A shift in market structure right about this region. A shift in market structure, which signifies that we're now selling. So after finding out now that we've gotten a shift and we're selling, then what we're meant to do after this MSS and this inducement key level tapping, the market says selling from here, because we also trade MSS like this. Like the way I marked out this setup now, I also trade like this, but that will be for another video. We're only talking about the type of breakout structures that works perfectly well in the market. So after we've seen the market now is selling, we will start looking for double breakout structures. To continue this trend with the market. So let's look for where double breakout structures happened. Where. So mind you guys, it takes time to form, or sometimes it takes weeks for it to. That's if you trade one pair, it takes weeks for you to see a double breakout structure on a particular pair. So look at this region now. Market did what? First breakout structure, second breakout structure, single candle inducement is here. Remember that I said that your POI or your double breakout structure must have inducements backing it up. This you might mark here as an engineered liquidity, but me, I saw the single candle inducement here. It's a single candle inducement which market should take out. Then this is another block right about this region. This is another block where price might respect, or price will respect normally, because there's no valid POI. There's no valid POI around this zone. There's no valid POI except this other block. So we'll pick ourselves from there. Target the nearest zone of interest or the closest liquidity range. Like, take a look at this region now. This is a low. It's a low, and price must take out this low to confirm that we're selling. That's what I mean by the closest liquidity available. Price must take out this low to confirm that yes, we're still selling. Or you can target the overall low. Depends on your choice. So we've seen our first entry. This is just how you keep picking your entries with this double breakout structure until we're done with this selling phase, and then we'll start looking for buy opportunities. As you can see, we didn't see any more opportunity with the double breakout structure. We didn't see more opportunities, just this sell that we saw here and this one, but this one was with an MSS. So it's just like that. Let's check for a buy scenario now. Let's look for a buy scenario. Let's go to our time frame, because it's not just only sales that this thing happens. It happens both for buys and sales. Then go to our time frame. Let's take a look at this region now. Market shifted structure here. a shifting structure, up into an order block. So coming to this region now. Coming to this region. Let's see if we can. Then we'll be targeting this high now as a possible zone of liquidity or reversal zone. Then we'll go back to our 1 hour time frame, which is our entry time frame. Now coming over to my 1 hour time frame, you can see that order block which we marked. So price came down to this area now, this order block, and shifted. After a shift, we saw this liquidity, this inducement. Then I mark my POI. This is just how I trade. I mark my POI and wait for price to come and tap into my POI for buys. Wait for price to come into my POI for buys. This one failed. So even if it fails, I'll still keep looking for my entry. I'll be looking for more entry. So see a double break of structure. A double break of structure entry here. First break, second break, third break. So mark your inducements. Mark my inducements, which is around this region. Single candle pullback. Then I'll mark my order block where I want price to come into before buying. This is where I want price to come to before buying. And price came there, tapped into it, and then shot up. It shot to the upside. Can you see? I see how this works like magic. I'll target the closest zone of liquidity, which is that area there. Market ended up dishing out. This is what? How many RR? 1:12. If you are risking $1 on this trade, you are making $12. How crazy is that? This is just how to trade. You keep looking for your entries with these double breaker structures. Just keep looking for entries just like that. Look at this region now. First break, second break, inducement at this region, breaker block, enter from this breaker block, and market kept buying. So just if you are confused, let me know in the comment section. Just drop your questions and I'll answer you. I'll take my time to go through the comments. And answer your questions. So this is just an easy strategy. You can backtest and you can learn the art of double breaker structure. Sometimes one breaker structure fails every time. It fails most times because it gives you fake informations. It just gives you noise. But to cut out those noise, that's why this double breaker structure is advisable to trade. This is the best way of marking your breaker structure. So just take your time, backtest this thing. I just thought, go through your charts, backtest it, do your top-down analysis, learn how to spot it with your naked eyes. That is, if you want to trade this wheel, learn how to spot it with your naked eyes, then trade it in direction of the trend. Don't trade against the trend. So that will be all for today. That will be everything for today. If you want to learn more, hit the subscribe button. Tell me where you're confused in the comment section, or tell me what you want me to teach you next in my next video. Then share this video to all your Forex friends, share it to your groups. It might help somebody out there. Thanks for watching. Stay tuned for more videos.